All right, let's go through the investment pop quiz number two. And again, if you want to get the full benefit of learning, you need to take the quiz first. Again, it's not graded. I always say non-punitive, non-counting, um, kind of barometer of where you're at a point in time, what your understanding is. Okay, so here we go. Question one: ownership shares in a corporation. So we would use the term shares or stocks. I think probably the most common term is stocks. All right. Next question is who owns Microsoft? You know what I'm going to do really quick? I'm going to Google something. Hold on a second. So I just had to Google that question. Like, what percentage of stock does Bill Gates own? I just popped this up here. This is NewYorkTimes.com. I don't see a date on this, but Bill Gates owns 1.3% of Microsoft. You may think that's like a teeny percentage. Yeah, but he owns 100 million shares of their stock. That's a lot. And his stock is worth $16 billion. So you own 1.3% of a I shouldn't say multi, but it's worth over $1 trillion. You have a company and you have an investment that's pretty big. All right. So if Bill Gates owns 1.3% of Microsoft, who owns the rest? Just regular old shareholders. We'd say stockholders, shareholders interchangeably, whatever the case might be. Just ordinary people, thousands of them own stock. They are legal owners of Microsoft. Okay. Question three: if Verizon is selling for $52.73, IBM 152.87. These are old stock figures, by the way. How's IBM stock performing compared to Verizon's? You cannot compare them. All right. You cannot compare one stock price against another. You can compare their percentage change and are they growing or dropping in value and compare how that's going. But if you cannot compare one stock to another, corporations can artificially manipulate their stock prices through a variety of means. All right, number four, a short abbreviation of a company is assigned by the stock exchange. And by the way, as we go through these review quizzes, pop quizzes if you like, strongly suggest that you take notes electronically, paper, whatever, to kind of hone in on those areas you're still struggling with, not quite understanding. A short abbreviation of a company is assigned by the stock exchange. We call this a ticker symbol. So really, I just pulled up the finance.yahoo.com, and again, ticker symbols over here on the left in blue. Here a CSCO, J&J, IBM. Some of them are a single letter. You see Verizon's VZ down there. I'm looking for a single letter example. My scroll isn't working very fast. There's V for Visa. Okay, those are all ticker symbols or shortened abbreviations of the companies. And I see that today, April 20th, the stock market is down 592 points. Dow is down again. Now we got up above 24,000. It's rebounding after this horrible slide because of COVID-19, but looks like it's down, dropping again. All right. So again, ticker symbol number 4. Number 5, Dow Jones Industrial Average uses this many companies as a barometer to show how the stock market is doing. So to give you a visual again, we have these companies listed down here, and they're showing as a weighted average all these stock prices down here and how they're doing. And again, I could scroll through these companies here. There's 30 companies there. They also call this the Dow 30. Not just the Dow Jones. Here you can see Dow 30 up here for the day. Again, a weighted average, how those 30 companies are doing, showing here in this figure, which is called a stock index. So that 23,650.44, at least for right now, today, that represents how these 30 big companies are doing all together, all thrown into one basket. That's a really important concept to understand because more than anything else, the Dow Jones Industrial Average, also known as the Dow 30, gets the most press of anything else in the news. Okay? And like I just said, so 5 was 30 companies. 6, the figure, the DJIA, the Dow Jones Industrial Average, which measures how those companies are doing. Again, that figure is called a stock index. Stock index. Okay. Per share amount, usually declared quarterly, where a corporation shares its wealth with its owners. I'm going to break here really quick again. So I just pulled up Cisco, CISCO. you're not sure what Cisco does, they make a lot of the computer parts inside your computer. All right, all those routers and stuff like that. Cisco makes buku bucks, serving internet service and providing equipment for you to connect stuff with. If I go back to April 2nd, you see it says 0.36 dividend. That means that every shareholder that owned a share, for every share that they owned at that point, April 2nd, the board of directors said, hey, we had a good quarter. Let's pay off our stockholders or shareholders some money. So they're going to pay 36 cents per share dividend. There's that term there. And again, that's the answer to number 7, a per share amount usually declared quarterly. Again, when we say quarterly, we're saying 1/4 of a year or 3 months' time, corporation shares its wealth with its owners. Because its owners, those stockholders, are legal owners of the company. Spreading your risk across multiple stocks. You'll see this on the stock market video, the Modern Marvels video. Again, this is called diversification. If you did your Investopedia investment of 5 stocks, you spread your risk over 5 stocks. You diversified your investment rather than putting all your money on one stock, which if it went down, you'd be in trouble. When we say a group of stocks, if you remember from the Investopedia unit, a group of stocks is also known as a portfolio, anything more than one. Okay. I make a single investment in a mutual fund of $10,000. I want to double my investment. The average rate of return on the investment is 9%. Approximately how long will it take my investment to double? Now we're assuming annual compounding here. Annual compounding, which means every year your balance is being recalculated and you start the next year with the balance you ended the previous year with. Okay. Now, hopefully you recognize this as a rule of 72 question. So our numerator is going to be 72. Divide by my interest rate, not converted to a decimal. I'm just going to say 72 divided by 9. That's going to equal 8 years. 8 years. I'm going to take my money approximately 8 years to double, given a 9% return. Again, I'm assuming annual compounding with rule of 72. The amount of money doesn't matter. It could be 10,000, it could be 10 million, it could be whatever. That doesn't matter. It's 72, rule of 72 again. The reason we say rule of 72 is in the numerator and the interest rate is in the denominator. Okay? What basic assumption other than mathematical formula does the rule of 72 rely on? I just mentioned that. We say annual compounding. Annual compounding. I'll give you another visual here in a moment. Again, when we say annual compounding, here's simple interest. For every year I'm making $900. And over here in the previous model that we looked at, first year, yeah, I make the same as simple interest, but my $10,900 over here on the right for compound interest becomes my beginning balance for year 2, and therefore my rate of return of 9% is being applied the second year to 10,900, and the second year I make just a little bit more interest, and there's my balance at the end of the year. My balance at the end of year 2 becomes my balance at the beginning of year 3, and so on. And you can see with compound interest in column G, the amount of interest or money I'm making from someone borrowing from me. I'm investing, so they're using my money. They pay me more and more over time with compound interest. I'm earning interest on top of interest. And after a while, that just goes crazy. After a while, I'm making $4,600 a year in an interest. If I copied that down several more years, it'd get even more crazy. Okay, compound interest. All right. Let's go back to my quiz. All right. Let's see here. When I first invested in Microsoft a year ago, it was selling for $62.30 a share. It closed today at 88.19. What is the percentage increase, decrease in stock over 1 year? And again, I suggest you do a timeline where X1 is your first amount, and over time, over here, X2 is your second amount. Picture an arrow down over here on the end here. Let's put an arrow down here. Okay, there's my little arrow. Okay, little timeline, X1, X2. Okay, that's a starting point. Pardon my graphics here, this is like really rudimentary. So what's X1? What was my starting point? Well, it says it was selling for 62.30. It closed today at 88.19, which is later, right? So X1 is going to be 62.30. I'll say X1 equals 62.30. Okay, come back here a little bit. X2, let me get rid of my timeline here. That was kind of irritating. All right, X2, my second amount, equals 88.19. So I have to identify what's X1, what's X2. Again, your percentage change formula is going to be, where did you end up at X2? I'll put this in parentheses here, by the way, so it's not confusing. X2, where I ended up with, minus X1. Lowercase on that. Lowercase on that. Okay. X2, my ending point, minus X1, my beginning point. And again, they use the term arithmetic change, or has my value, overall dollar amount, has it gone up or down? All right, that's X2 minus X1. That could be a negative number, by the way, just so you understand. And I'm going to divide by, again, PEMDAS, do parentheses first. I'm going to divide by, we're using a percentage calculation, the percentage change. Percentage change from what? Percentage change from my initial amount, which is X1. Okay, so if we drop in the numbers, we have 88.19 minus 62.3 divided by, well, what was my starting point? Well, weird, it was 62.3, that's correct. 62.3. And that equals, pause while I calculate the answer. We'll Excel 101 here. 88.19, which is X2 minus X1, 62.3, parentheses first, divided by 62.3, and I come up with that thing there. Convert that to a decimal, to a percentage, add a decimal place, comes out to a 41.6% increase. Understand that could also be a decrease. Okay, so overall that ended up being 41.6% was my percentage change. Last nonsense question, number 13. One story pink house, pink person, pink cat, pink everything. What color were the stairs? Weird, and it was a one-story house. Oh, yes, there are no stairs. Thank you so much. I hope that was helpful. Again, drop me a line if any of this is confusing, especially percentage change. If you don't understand that, start with a timeline, X1, X2. Understand you can have a percentage decrease. Also predict what your answer is going to be. Was this going to be a giant increase? No, 62.3 to 88.19. That's a pretty good increase, but not huge, not like 400%, right? So kind of predict what your answer is going to be. Is it going to be positive or negative? Did it overall go up or down? Read the question, kind of analyze it before actually doing the calculation, and then step back and go, does that even make sense? All right? I hope that's helpful. Thank you for your continued progress. Here we go.